Hey everyone, welcome back to Corporate Dakota, the place where we break down the nitty-gritty of big business deals, and this time we're dissecting a document that's thicker than my grandma's fruitcake at Christmas, and it's packed with more twists than a soap opera. So buckle up, because we're diving into a merger that's basically two companies playing musical chairs with their stock and their names too. Let's cut to the chase. Carisma Therapeutics folks, they're in a bit of a pickle. They've been cutting costs, reducing stuff, and basically prepping for a wind down. But surprise, surprise, they found a dance partner, OrthoCellix's, an outfit that's all about regenerative cell therapies, and they've got this one product candidate, NeoCart, that they're really banking on. This document is an amended registration statement, which means they've already filed something and now they're tweaking it. Think of it as a first draft with some important edits. Yep, that's our main player here, Carisma. So what are they up to? Well, they're basically telling the investors, hey, we're going to merge with OrthoCellix's, and oh, by the way, we need your vote on a bunch of stuff. This merger is a big deal for both sets of stockholders, and they're all getting a heads up. So the deal was struck in June of 2025, and it's essentially a merger where OrthoCellix's will survive as a subsidiary of Carisma, but then Carisma itself will actually change its name to OrthoCellix's Inc. Talk about a name change, like a chameleon buying a chameleon. Carisma, following the merger, is referred to herein as the combined company. Now here's where it gets interesting, because the structure is a bit like a reverse takeover. OrthoCellix's is essentially taking over Carisma in this deal. So what do OrthoCellix's stockholders get? Well, they get Carisma's stock, but the numbers are quite something like approximately 3353557827 shares of Carisma's common stock for every single share of OrthoCellix's stock. This is a massive stock for stock deal, and it means OrthoCellix's stockholders will own the lion's share of the combined company. Right after the dust settles, Carisma's original stockholders are expected to own only about 10% of the new company, while OrthoCellix's stockholder Okyujin and the other investors who are ponying up cash will own the rest, a whopping 90%. This tells you who's really in the driver's seat after the deal. Carisma's stock is currently trading on Nasdaq, but it's been struggling. The ticker is CARM, and getting listed or staying listed is a huge deal here. This proposal is all about getting the green light from Carisma's stockholders to issue a ton of new shares. Nasdaq has rules about this, especially when a deal involves over 20% of outstanding shares or results in a change of control, and they need that stockholder approval. And what's a merger without a little controversy involving executive pay? Stockholders are being asked to give a thumbs up or thumbs down on these special payouts. It's an advisory vote though, so it's more of a public opinion poll. Now for the scary part, the risks. This section is usually dense with legalese, but it's where the companies tell you what could go horribly wrong. This one's a real kicker. The stock swap ratio is fixed, meaning it doesn't change even if Carisma's stock price tanks. OrthoCellix's stockholders might end up getting shares worth way less than they expected. That's a big risk right there. Carisma is basically running on fumes. They've burned through a lot of cash, and their future is hanging by a thread dependent on this merger closing. Their total revenue for the year ended December 31, 2024 was $19.6 million, while expenses were a colossal $81.8 million, leaving them with a net loss of $60.5 million. That's a lot of red ink. And get this, OrthoCellix's as a separate entity had no cash at all as of June 30, 2025. Their entire plan hinges on this merger and raising more money right after. Let's look at the financials for Carisma. They've got a lot of red ink here. For the year ending December 31, 2024, their total operating expenses were $81.8 million. The deficit is over $300 million, while revenue was just $19.6 million, leading to an operating loss of $62.2 million. This pro forma balance sheet shows what things would look like if the merger happened. Notice the massive cash inflow from that concurrent financing of $25 million. That's crucial to keep the combined company afloat. Looking at the income statement for Carisma, the numbers are stark. Collaboration revenues in 2024 were $19.6 million, but R&D expenses alone were a whopping $59.7 million. That's why they're in this merger situation. OrthoCellix's situation is also dire. For the 3 months ended June 30, 2025, their net loss was $506,000. They're pretty much running on fumes too. This is the legal blueprint for the merger outlining all the terms and conditions. It's filled with legalese, but it's the foundation of the whole deal. And who advised Carisma on this deal? Well, Lucid Capital Markets delivered an opinion stating the exchange ratio was fair financially. But remember those numbers especially, the exchange ratio is subject to change based on Carisma's cash reserves at closing. Modernitex Inc. is a major player here, owning over 12% of Carisma's stock. They're definitely watching this deal closely. And guess who owns OrthoCellix's, all of it OQGen Inc. They're the sole stockholder and will be the major owner of the new company. This implies OQGen is really calling the shots here. So what's the story here? Carisma, on its last legs, is being acquired by OrthoCellix's in a deal that looks more like OrthoCellix's is acquiring a public listing than anything else. Carisma's original stockholders are likely to get diluted significantly, and their company's identity is being subsumed. OrthoCellix's gets a public listing and a cash infusion crucial for its NeoCart development. The risks detailed in this filing are substantial, especially for Carisma's current stockholders who are betting on the merger closing and the new company's success. It's a high-stakes gamble in the biotech world. What's your take on this merger? Will the new OrthoCellix's soar, or will Carisma's old problems drag it down? Let me know in the comments below. And if you enjoyed this deep dive, don't forget to smash that like button and subscribe for more corporate deconstructions. Also join our Discord community linked in the description for more direct insights. Thanks for watching, and we'll see you next time on Corporate Decoder.